Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, July the 14th, Bastille Day, special, very special this year, one would have thought, for the French. But looking at the FTSE 100 to start off with, and here you can see we've got a resistance line there towards 82.90. Didn't quite manage to get an end of week close above the 50-day line, which would have been nice, or that May resistance line. But above that, we're looking for this market to hit 83.71. The intraday June spike high that we had. On the downside, not expecting anything lower now than 81.55, which is the floor of that channel from last October. RSI at 54.7, but still, we haven't had a breakout through the 55 level since the end of May, and that really would be an end-of-day close for the RSI above 55, really would be a leading indicator on the upside. So it's almost like a weird range situation we've had there for this market in the RSI area. Moving on to the DAX, and here there have been hopes that we'll be able to break the near-term resistance line that it has. So basically like analogous to what we have at the FTSE, but the DAX is hopefully a day ahead there. The line there at 18,700, above that obviously looking for retest of 18,900 record highs, and then hopefully up to 19,800, which is the top of that rising trend channel from September by the end of next month, and obviously if things go well, a bit sooner than that. On the downside, not expecting anything below the floor of the rising trend channel there, 18,300, and ideally not even below the 50-day line, 18,400. Moving on to the Dow, and here the position is that we basically managed to close on 40,000, which is what we were hoping for after multiple days and weeks above the 50-day line, the rising 50-day line. That tends to be a leading indicator on upside. And while we're above the June peak there at 39,600, we're looking for up to 42,000 as soon as the end of next month. Obviously, it'd be very tempting to say by the end of this month, but maybe that's a little bit too keen, I think, at this stage. Moving on to Bitcoin, where we managed to close above, or be above, the rising 200-day moving average. We closed above the rising 200-day line yesterday, and we've had price action above it today. Still RSI below the neutral 50 level, but that end-of-day close yesterday could be a signal that we're going to head up to the 50-day line, 64,000. It also may be a signal that we're out of the woods in terms of the retreat from record levels near 74,000. I think it was, we said before, the situation even in a bull run is that you tend to get a little overshoot to the downside below the 200-day line before the market then resumes the upside. And we had that back in August, September last year, and then we had the massive rally. So at the moment, with the push above the 200-day line and bullish divergence in the RSI window after lower July support versus June, Bitcoin looking rather better than it has for some weeks. Moving on to gold, which I managed to forget about on Friday, and here we had the weekly close above the 2,400 level. We've been looking for 2,600, and I'll be mentioning it like a broken record anyway, by the end of next month. And while we're above the 50-day line there, 2360, let's call it, looking for 2,600 by the end of August. RSI rebound above neutral 50 as well helps the cause, as does that rising 50-day line. Moving on to the stocks, and showing off with the first stock here, which is Beeks. Here you can see that over the recent past, well, basically over the year, we had three different targets, one around 126, one around 145, and then the final one around 190. Above that final line there, the final target there at 193, looking for a fresh target here, as high as £2.40, and maybe that'll happen as soon as the end of this month, given the way things are going. On to critical metals, where the companies had to negotiate one or two bumps in the road in terms of the fundamentals, let's say, but looks like we've got a rising trend channel base here, and a V-shaped bull flag, as I call it, end of week close above a rising 50-day line there at 5.88 pence, and above that looking for up to 9 pence by the end of next month, but the higher low as well for July, giving us encouragement versus the May support zone, or pre-May support zone. Classic setup here at Emmerson, which I've covered during the week. Unfilled gap to the upside off the low, bear trap gap reversal. So those are two of our favourite signals there. And above the old April 1.8 pence support, looking for up to 3.25 pence by the end of next month, or even sooner on that situation. Ideally, we stay on the right side of the 200-day line, just below 2 pence if we are lucky. Haven't looked at Europa oil and gas for a long time, but here we are back again, and let's see if this time there'll be a little run to the upside. There already has been a run to the upside in the terms of the double bear trap below the old January support there, 0.87. The view now, though, is that above the 200-day line there at 1.02, we're looking for 1.37 by the end of next month, or even sooner than that. That's the top of a broadening triangle there from last September. We're backed by bullish divergence as well, so low lows for June, but higher RSI trace. So I think the only thing missing there probably is that the 200-day line needs to rise as well, the 50-day line already rising. Interesting position now at Faron Pharmaceuticals. We called this up, I think, in March, April, and it hit that purple line. Didn't get to the best levels, but hit that purple line, then came back and then gapped down. The setup now, though, is a bear trap island reversal, so gapping down, then gapping up after hitting new lows. That tends to be one of the strongest signals around, so let's see if that works this time. Above the 50-day line here at £1.40. Initial target is what our old target was there at £1.67, and then looking for the 200-day moving average. That's our favourite scenario by the end of this month. That's there at £2.13. So just basically we're looking for a repeat of the April-May price action for July and August. Moving along to Goldstone, which has rehabilitated itself. I interviewed the company during the week, and that was very encouraging too. Here we've got a V-shaped bull flag based at the 50-day moving average at 1.25 pence. Obviously we just bear trapped below it, and also basically tested the floor of the May gap. Current view is that above the 50-day line, 1.25 pence, we're looking for the shares to basically head back to the old, if I can get it on the chart, the old gap there from back in June up to 2.9 pence over the next, well, hopefully by the end of next month. Obviously, initially, we've got that 200-day line at 1.9 pence as resistance. Moving on to Genedrive, which I looked at on Wednesday and then chickened out. Obviously, I was still recovering from the £6 million fundraise that the company managed to get over the line in May, and was thinking, obviously, that a little rise in the share price might be an excuse for the company to deliver another fundraise. But at the moment, we've got the top of the May gap there at 3.14 pence as the initial target, and the next target after that would be the 200-day line, 5.6 pence, obviously, if there are no fundraisers, or maybe the shares will go up even if there is a fundraise. But the key here, the key driver of the rally was a break of neckline resistance back there on Wednesday around 1.95 pence level. Thursday had the bounce off the 50-day line, and then obviously up after that. But the key here, I think now, is that we have no end of day close back below that high there from back in May, that level around 2.5 pence. So basically, we want to hold the 2.5 pence area. If you can afford it, it would be the floor of the gap there at 2.3 pence. Next up is a stock which is not quite so hairy, hopefully, and it's Gelion. And here you can see that we've got this V-shaped bull flag, second gap, unfilled gap to the upside we had last month after the one in May. So this looks like a situation which is potentially really on fire. Initial target here, the previous target there, which was hit in April, 32 pence, and then looking for up to 46 pence by the end of next month. And ideally, we stay on the right side of that 200-day line at 21 pence. Helix exploration is next, and here it's been a bit of a party. Beautiful candles over the last week, blue candles all the way, or clear candles. Our target here up to 32 pence by the end of this month. And if you're a fan of the shares and looking for greater glories, which have been called up here all the way, I think, so far, then the upper parallel of that rising trend channel from back in May is heading for as high as 44 pence. And that would be the target for the end of next month. So let's see if Helix can step up to the plate. Ideally, we stay above the floor of that rising trend channel at 22 pence in the interim. Ideally, if we're really lucky, it's 23 pence, which was the initial July resistance, but 22 pence, the floor of that channel. Moving on to Hydrogen Utopia, where even though the shares didn't react very well or very strongly to the canopy growth deal with Ochrid, I think it looks as though we are in a rising trend channel there from January. We have bounced off a rising 200-day moving average this week. All we need to do now is break the 50-day line there at 7 pence. Above that, looking for 12 pence by the end of next month. RSI's pushed through neutral 50 as well for the first time since the end of April, so that is also potentially a signal. Early and end of day close back below 6 pence would delay the 12 pence target on HUI. Moving on to Helium 1, where people did enjoy or have enjoyed the aftermath of the last placing, where shares were placed at 0.5 and went to 1.5, so 3x isn't bad. Bounced off the 50-day line, 1.07 pence. Above that, we're looking for basically a return to 1.75 in the April resistance over the next few weeks. And the only thing missing there is that the 50-day line is still falling, so presumably when that starts rising, hopefully early next week, the shares will bounce well. Moving on to Mosman, which is one of our favourites, just because it's done exactly what we wanted it to do. Here you can see that we had our target there, 0.069. The next target there, the upper parallel of that rising trend channel from April, is heading for 0.085, and we're looking for that now, obviously, over the next couple of weeks, well before the end of this month. I don't want to tempt fate by coming up with a new target there, but obviously that old spike there is the first target and should be hit soon at that particular level. Moving on to Optibiotix, where I was very proud of myself that managed to spot this one with the shares just a simple bear trap rebound from below the April support there around 17 pence. Above that, we were looking for an initial target there at 26 pence. I think some bright spark thought that the shares would be mentioned in the papers this weekend, but it doesn't really matter. The resistance line target there from November, 32 pence, and we're looking for that well before the end of this month. Simec is next, and here the story is of a beautiful V-shaped bull flag. We've already had two unfilled gaps to the upside since May, and a golden cross. So basically, it's all, everything's going on here in a nice way. The V-shaped bull flag would be broken at 2.6 pence, so an end of day close above that, and we'd be looking for 3.2 pence by the end of next month, or even sooner. And ideally, we stay on the right side of 2 pence recent support, or just below that. Sunrise is next, and here, always a difficult one, this one, largely because it's sort of stop and go in terms of the trading action, but here we're assuming that we're going to stay above the 200-day moving average there at 0.06 and head up to 0.13 at the top of that rising trend channel from February last year by the end of next month, which is a punchy call, but you can see from previous times, the August to November rally during 2022 was a significant move, and expecting something like that to happen on this occasion. Only back below the floor of the channel there, 0.05, really questioning the idea of a big move. Finishing off with URA, where I suggested last weekend that the shares have been treated rather unfairly, and luckily they're up 40% this week. We've actually closed near the 200-day line to 1.75 pence, but at least while we're above the 50-day moving average at 1.6 pence, looking for 2.7 pence by the end of next month, basically retesting the main resistance area of the last year for the stock. Ideally, we stay on the right side of that 50-day moving average. That's it for me today. More updates during the week.